Good morning, good afternoon, and good evening, depending on the location you are watching me from. My name is Dunzo Onwordi of Dunzo Onwordi Accountancy Tutorial. Today I'll be taking you through one of the tools used by management for decision making. This particular one is budgeting and budgetary control. In my last lecture, I dealt with it at length theoretically. Today, I'll be going through the practical part of it, that's the computation. Okay, so I know it is not an interesting exercise, but this is what we have to live with. So please get your pen, paper, and calculator ready. I have mine with me because the worst thing you will need to do is to get a figure wrong, because once a figure is wrong, every other thing will crash. So no matter how simple it looks to me, I always confirm it using my calculator. Please, let's walk through this journey with me, making sure you're looking at the paper in front of you. If I have to bring up anything on board, I will, but mind you, there's enough space to bring everything on board. Right. Budgeting and budgetary control. Let me pull out the question now so that we can go through it. The question is based on Baker Limited. Baker's Limited is preparing the budget for the quarter ending June 30th. Budgeted sales unit for the next 5 months are April 20,000, May 50,000, June 30,000, July 25,000, and August 15,000. We've been given these 5 months, but we only need 3 months, quarter ending June, but we might be needing data from all these periods. That's why we have them all here. The selling price told us is £10 per unit. Additional information given from the budget document include 1. The management of Bakers Limited wants ending inventory to be equal to 20% of the following month's budgeted sales unit. On March 31st, 4,000 units were on hand. That's the opening figure. 2. At Bakers, £5 that's in weight of material are required per unit of products. Management wants material on hand at the end of each month to equal 10% of the following month's production. On 31st March, 13,000 kilograms of material were on hand. Material costs 40 pence per kilo. 3. At Bakers again, each unit of product requires 0.1 hours of direct labor. The company has a no layoff policies, so all employees will be paid 40 hours of work each week. B. In exchange for the no layoff policy, workers agree to a wage rate of £8 per hour regardless of hours worked, no overtime pay. For the next 3 months, the direct labor workforce will be paid for a minimum of 3,000 hours per month. Require. Show the budgeted revenue for this period in appropriate tabular format. 2. Prepare the production budget. C. Prepare the direct material budget. And D. Prepare the direct labor budget. We go as far as we can with this question requirements, and if there's any we are unable to touch due to time, we will do that in my next tutorial. Before we start this question, I will let you know that there is no particular way of doing things. There are so many ways of doing things, but my approach to budgeting or computation that had to do with trading accounts, I always like to follow the standard the accounting and cost of goods sold structure. I will start with opening stock. I will add my purchases. That will give me total available. Then I will deduct from that my closing inventory, and that will give me the units used, cost of goods sold. So the structure that then is this: cost of goods sold account will be opening stock. I will add purchases or production. That will give me total available. I call it available. From this, I will knock off a stock take, closing stock. Knock that off from that. That will give me cost of goods sold. Cost of goods sold. This is the format I will use in computing the budget. Understanding this structure will let me know what to add or what to deduct, because most of the time one of the figures you will need to derive yourself. They will not give you two figures unknown. Only one will be unknown, and you can do that by either adding or working backwards to get the figure you're looking for. Okay. And our first question here was to show the budgeted revenue for this period in appropriate tabular form. Tabular form will be, the appropriate one will be to have your months in column and the item like the sales unit, sales price in the row. So let me draw that now. Remember, we start from April. Let's start with April, May, June, July, August. These two are just supporting period, because the thing we need actually should be at up to June, which is the quarter we're looking for. I can say this will be my total for the quarter. Total. Alright, if I need to put the total, I will put them there. So my sales unit as given April is 20. I will do it in thousand, so I will not write so many figures here. It's in thousand. So April is 20, May is 50, June is 30, July is 25, August is 15. Okay. And the selling price is £10. £10, £10, £10, £10, £10. They remain fixed. So the revenue was 10 times 20, 200 for April, 500 for May, 300 for June, 250 for July, 150 for August. So that is my A sales budget. That's my A sales budget. B, we have been asked to prepare the production budget. B, production budget. This is where I will now apply this structure I've presented to you earlier. Production, I will have my opening, I will now have production, that will give me a variable, I will now have less closing, that will now give me used. Okay, cost of goods sold. Now, looking at the question, we are told somewhere that the opening production or opening goods were 4,000 from March. So opening for April is 4. I'll get that there. I know sold was 20 units. I can put that here. And remember in the document they said management of Baker wants ending inventory to be 20% of the following month's budgeted sales unit. The budget sales units 50 for next month, 30 for June, 25 for July, 15 for August. 20% of this will be the inventory at hand. So 50 times 0.2, that's 10 will be here now. Then 20% of 30, which is 6, will be here. 20% of 25, which is 5, will be here. 20% of 15, which is 20% of 15, which is 3, will be here. Okay. You got to do this for all the period, lest you forget. Now I've gotten closing. My closing this period in April will be my opening for May. So I will send it straight to May. This will go straight to May. This will go straight to June as opening. Okay, and this will go straight to July. All right. So my closing time become opening for May. My 6 closing for May becomes opening for June. And my 5 closing for June become opening for July. Okay. Now, what we need to do is to work back. If I had to knock some 10 off a figure to get 20, what is that figure? So it means I have to add 10 to 20 to get 30. That 30 here, that total available. So this one will be 56 available. This one will become 35 available. And this one will become 28 available. You have to do that as it flows. Now that I got all the total available, what did I have to produce to get that total available? We have to produce something, add it to the opening to get the available. So it means that the production will be total available less what we have at hand at the beginning. So it's 30 minus 426 was produced. 56 minus 10, 46 produced. 35 minus 6, so 29 I suppose, produced. And 28 minus 5 is 23 produced. This is my production budget completed. No gap so far. Okay. Now what we need to do now is question 3C, which says prepare direct material budget. Direct material budget. Here again, you need to pause off, lay out the structure the way it is again. Opening material at hand. Opening. You have to add purchases. That will give you total available. Less closing. Will now give you material used. Let's try and slot in as much as we can. We are told again somewhere in this document that opening material was 13 kilogram on hand at the beginning. On March, 13 kilogram was the closing. So that's the beginning for April. So again, it's in kilogram and it's in thousand, still in thousand. So I will call it 13. 13 for opening. Here, 13. All right. We also told here that 1 minute. We are told that 5 kilogram of material we are used to produce 1 unit. Was used in production. So if we use 26, if we produce 26, it means that 26 times 5 is the material used. 130. And we are told that it is a policy to keep 10% of material on hand for the next month production. Management wants material on hand at the end of each month to equal 10% of the following month production. So the following month production here will be 46 times 5 just as we did 26 times 5 to get this. So with 46 again times 5, which will give me 230. Okay, and 29 times 5 will give me 145. And then 23 times 5 will give me 115 for July. In case I need it, I have to put that there. That's how far I went in production. Since I'm going to keep 10% of this in the current month in April, so 10% of 230 is 23. 14.5 and 1.5. So 10% of May 230 will be opening and closing here. 10% of this will be 14.5. 10% of this will be 11.5. Now that I know all these figures, the rest will be easy, because I know that my closing here will be my opening there. Let's see if I can use a straight hand without ruler. Okay, and this will come here, and this will come here. So let's see if it goes well. Okay. So 23 will come under May 23, and 14.5 will come under June 14.5, and the 1.5 will come under July. Okay. Let's now close the gap. This plus this, just as I did here, will come up to total available. That's 153 total available. Because if you add this plus this 153, 230 plus 14.5 will give me 244.5, right? And then 145 plus 11.5, 145 plus 11.5 gave me 156.5, 156.5. That's it for that so far. Now that I know the total available, what did I purchase, in addition, to add to the opening stock to arrive at that. So the opening stock, the purchase will be total available less the opening stock. 153 minus 13, 140 was purchase. 244.5 minus opening 23, 221.5, and then 221.5, and 156.5 minus 14.5, 142. So it appears we have closed all the gaps on the production and direct material budgets. The thing we can do, because it's for the quarter, is we can actually add, cross-cast them. We know this opening will be the opening for the whole quarter, so you put 4 here. Opening is 4. I will know that the closing in June will be the closing here, 5. Those are the things you have to make sure you get right. Your opening will be the opening here for the quarter, and your closing will still be the closing for the quarter. So we add all the purchases, this April, May, June, and put it there. So production 26 plus 46 plus 29 equal 101, 101. Add it to the opening, 105. Okay. So if we deduct, total available is 105. Deduct closing, so it means 100 was the cost of goods sold. Are we right? We can confirm that by adding 50 plus 30 is 80 plus 20 is 100. That confirms this figure. All right. Now let's look at the date of material. Our opening again will be the same as starting. Our closing will be 11.5. Okay. Use will be all this total. 130 plus 230 plus 145, 505, 505. If we know that total use of 505 and the closing was that, so what was total available? Add that to the plus 11.5, 516.5. That's what it should be. Okay. Purchases will be 140 plus 221.5 plus 142, 503, 503.5 plus 13. Okay. So 156.5 minus 11.5 with 503. Okay. So that looks as if they are okay. Check again. Okay. Our cross cast again should be okay. It looks okay, but I still need to check it again. 13 is the opening there, and all the purchases is 140 plus 221.5 plus 142, 543, correct? Then this plus that will give me total available plus 13, correct? Closing is the closing here, 11.5. Take it off from total available minus 11.5, 545. So gentlemen and ladies, this is how far we can go today. We have managed to get the 3 questions done. A, B, C, D will be doing in my next tutorial. So please stick around, subscribe to my channel so that you'll be the first to be notified when I present similar question exercise like this. And please like and share this with your colleagues, especially those who are probably in employment or those who are studying accountancy, so that they will kind of benefit from this hard work we have all done together. Okay, please do subscribe, because that's the only way you can encourage us to continue to produce things like this. Until we see again in my next tutorial or lecture, I will say thanks for watching and goodbye.